Hello, everybody, and welcome back to the daily analysis and insights from me, Henry. And I want to quickly cover here a few topics that I think will be of interest today. Number one, we're going to be discussing Trump and the effect that Trump will have on earnings in the S&P 500, as well as valuations in the US economy, especially with his plan to reduce corporation tax to 15% from 21%. That's something I want to discuss here today. Moving on from that, I also want to discuss valuations again, where we stand, where I think we can go. There's a few other points I want to make on top of what I said yesterday in my video on valuations. And I also want to cover the European markets. We're seeing some weakness now in all the major European markets. And will we see a follow through in weakness in the US market? That's something to consider. And then finally, I want to cover cryptos and commodities. And I want to look at Bitcoin in particular. Where will Bitcoin go? Because that will determine where the rest of the market will go. So without wasting any time, I want to go straight into sharing my screen. Let's go into sharing my screen really quickly. And I want to discuss, first of all, the S&P 500 and what happened yesterday with S&P 500. So as you can see, the large caps, Nvidia, Microsoft, Google, Netflix, etc., all green, okay? And we're seeing red or a bit of a sell-off or taking profit on the smaller to medium caps or the smaller stocks in the S&P 500. So nothing much to really consider here other than it was a flat day leaning towards a red day yesterday, and money cycling in and from these smaller companies, which are more growth stocks, especially the financials and some of the health tech, etc., going into Nvidia, Microsoft, and so on. Moving on to the next slide. Yesterday I covered valuations and I mentioned how we've deviated from this 16 PE ratio, on average 16 PE ratio for the S&P 500 in the last 25 years. We've deviated and we've gone around to 22, showing that potentially we might now be overvalued in the stock market, and that suggests that we should see a dip in the market soon. And this is also coupled by fears of Berkshire Hathaway essentially holding the largest amount of cash that it's ever held in its history, which I think it's around 300 billion. And previously it held a large amount of cash before the 2007-2008 crash. And this is a clear sign, I think, that now we're looking at stocks being overvalued. And Warren Buffett, I think in 2008, 2007, he was about a year to 2 years before the market in moving here predominantly into cash. But what I wanted to mention here is Warren Buffett focuses on long-term investing. Okay, so he focuses on a year's and multiple years in terms of growth for the company. As a trader, I focus on days and weeks and maybe even months. He might be 2 years in advance. We can't necessarily stay out of the market for this period, especially when we started to see now some suggestions that the market will be doing well and potentially going to 7,000. But that's something to discuss in a bit. Okay, so what I want to cover today, though, more importantly, is earnings. Okay, Peter Lynch says that every 8 to 9 years we get a doubling in earnings and roughly a doubling in the S&P 500. As you can see on this chart, the dark blue line is earnings, and the S&P 500 is the baby blue, light blue line. And we can see here that we've now got into a territory where it's a huge gap between these two. And usually when we get this gap, we then get a dip, as we did here in 2021. We got that dip, and then they became undervalued and then rebought, and then currently they are overvalued based on earnings. Okay, so on earnings, though, I want to cover what could potentially happen for earnings to catch up. So there's two options here: either earnings catches up to price, or price has to catch up to earnings. Well, one of those things is Trump's tax cut for corporations. And we have now large investment firms such as Goldman Sachs and so on, and analysts discussing the potential positive impact or the benefits to the S&P 500 earnings. And these are the industries. As you can see here, consumer discretionary gets 6% boost in earnings because of the tax cuts. And overall, the market gets a 4% boost. So if we do go to 4% boost, a 4% from 2, where do we go? Well, we go to around 290. So around this area here. There's still a significant gap here, especially considering that we are now projecting that there could be a growth in the S&P 500. So we have to be very cautious here in terms of when this moment comes in the next few months, maybe even the next few years. Let's see. Overall, very positive. Now with the S&P 500, I want to cover some of the technicals here. As you can tell here, I have been looking at the potential effects of that Trump tax cut. And one of the levels that I'm looking at is that 6,100, 6,300 is looking as an almost guarantee in the medium term, and then the overextension area at 6,700, and potentially even higher here. So we'll have to see where it's going to go. But personally, what I'm looking for here when I'm looking at these technicals is with this ascending wedge and tightening in price, the likelihood is that we're going to get a dip probably to around 5,600, 5,800, and then we can then get this upward move in the market. And, the other thing I want to cover is where do we see earnings and valuations boosting? And I covered it in yesterday's video, and I discussed here that the Russell 2000 is offering the best opportunity. We're seeing ARK Innovation, a few other growth orientated ETFs doing exceptionally well right now with investors looking to take on more risk. So with that in mind, yesterday I said to you guys that we will probably get a 40% move from the election onwards, and we typically get that 40% move, as we see here in 2020 we had that move, and in 2016 we had that same move. So if we get that move, we go to 3,200 on the Russell 2000, and growth stocks, like I mentioned yesterday, growth stocks and small and medium cap S&P 500 and S&P 600 and S&P 400 medium caps and small caps are probably going to do well here, because there is a huge gap between where the valuations of these smaller caps are and where the larger caps are. And now that I'm thinking about it, if we're thinking that the valuations of S&P 500 at 22 is too high, and the average of the last 25 years is 16, in actual fact, the small and medium caps are fairly valued at the moment. So if you remember the chart that I shared just a few minutes earlier, it was 16 that the level for essentially the 25-year average. So are they fairly valued? We don't know. I'm seeing huge moves now in the smaller caps. I've personally invested in Russell 2000 stocks. OLO is one of those ones I've invested in recently, and I'm going to cover that shortly. Okay, so going into more indices and other markets, I want to discuss European markets. As you can see here, the DAX index, or the German index, is now on the trajectory to go downwards, probably to around 18,000 or even less, especially after breaking this trend line and also creating a head and shoulder pattern. So I'm projecting here that we can get around 18,200, so a drop of around 6-7% here. Let's see. And when we look at the French market, we've already seen that move happen. And in fact, the French market has been showing weakness since its election. in June of this year. So we've seen a huge drop in the French market. I thought we could consolidate and then go higher. I then thought we could go higher here. We see some fake momentum here, head and shoulders, and now further downside, potentially again around this 1,000 area. The FTSE is also showing some weakness. So European markets are all showing weakness. At the level that I'm looking at on the FTSE 100 is this 7,800 area, so 1,900. That will be a key point where the RSI also becomes oversold. And if we look at the other markets here, we probably need these to be oversold as well in the next few weeks and months before we get a move moving higher. As we've seen here previously in August, that dip here produced a move going higher. And potentially if we do get a dip, we have to go into the sub 30 area and then get a move going higher in these indexes in Europe. Okay, so we've covered the European markets. We've covered where I think we can go with the European markets. And I want to go back to the S&P 500. I personally think that we can get a slight dip, as it's seen here by the RSI, slight dip and then a move higher above 80. Then we get a bigger sell-off at some point. Now, whether that sell-off comes in after the 6,700 area, so we get a couple of months of essentially dip and then we get momentum going in to 2025, and then we sell off in 2025, or we sell off now pre-election, which is usually what happens. Sell off pre-election, a cheapening of the S&P 500, a reasonable level on the RSI, and technical and investors overall will probably be buying the dip here, especially with the Trump momentum that we've seen in the last few weeks. So, yeah, I think there is potential here for the buying the dip to be a big move. So if that dip comes in, it's where I'll probably be looking to buy in on the momentum to continue much higher. Okay, so what I also want to cover is the market cycle and where we are in the market cycle. In terms of the market cycle, I think we're about halfway or 2/3 of the way. I do think that we can go a little bit higher. I think we're following this medium area here now on the run up, and we're probably following a trajectory similar to the 1960s and 1970s, and we'll see how that goes in the next few weeks. Okay, so that's something to look at in the next few days. Now, I want to go straight into crypto. Okay, I want to go into some of the charts. This is the S&P 500 chart. We already covered this and where I think we can go. This is a key area. 5,600, 5,800. If we do break this ascending channel, we can even come a little bit lower. Now, let's go into crypto. Crypto is the main one I want to cover now. Bitcoin. Okay, Bitcoin. I mentioned in the Telegram group that I have, and the link is in the bio to join that Telegram group during the day yesterday, that we could potentially get a dip to around 80 to 82,000 here. So that dip can then probably be bought up and then we'll go much higher. This is all based on technicals. The ideal dip is back at the retest of 75. Okay, that's the ideal dip. Whether we get that or not, I'm not too sure. I would have to see how price reacts around this 80, 90 level. It could easily consolidate here, move higher, especially considering the momentum and the euphoria now in the markets. Ethereum is slightly worse. As you can see here, altcoins are performing really badly in the last 2 days. They're being sold off, or there's a lot of profit taking, and investors are fearful of altcoins. Ethereum is on the trajectory to go and test this previous support area and make it support again. So previous support turned resistance, now going to turn into support again, hopefully for that run up all the way to 4,000. I'm still holding a trade here. I'm still looking to see where it reacts and if there's any real weakness. I would like to find support around 3,000. But if it goes a little bit deeper, I'm happy to hold it through for that longer term play where I can hold it for a couple months. Cardano, very similar sell-off here. And across the board, you can see that there's plenty of selling off in altcoins or profit taking, in my opinion, before we get the new move and everything becomes cheaper and investors want to get back into the market. Okay, so now, in terms of other stock opportunities, I am waiting for a slight dip here. I don't want to be too keen. And as you can see, there was a sell-off yesterday, and there will be probably a sell-off moving in to the next few days. And then I'll be sharing some ideas here on my YouTube channel, but also my Telegram group and Instagram. So go and follow those accounts. Go and join the Telegram group for free. There is no charge. I just share information there about my trades and what I'm doing and my insights in the markets every single day, like I am now on YouTube. So no ideas here yet. I did like Mongo though, so let me just share that while we're here. And I was looking at this as an opportunity. I do like the consolidation here on this one, and I do think that we can get a 30% move back to this area of 380. Another software company, and then I mentioned earlier Arc Innovation and how it's moved extremely well in the last few days on Trump's election. And don't forget, guys, that we will have interest rates being reduced in the next few months, most likely reduced. And with those reductions coming in, we're probably going to see a spike up in growth stocks. And that's why I'm so heavily invested in the Russell 2000. I'm mentioning over and over again that the Russell 2000 is offering one of the best opportunities for you guys to make at least 40%. Even if you just invest in the index itself, you're probably going to make 30 to 40%. But if you select the right stocks, you're probably going to make more. Now let's go into commodities. Okay. Really quickly, we'll go into the dollar. So the dollar keeps rising here. Nothing new to see, and it's broken this level. Yesterday I mentioned that we have to see here how it reacts. It's broken this level. The levels above now are the 107 here on the dollar index. Okay, on the Dixie. So we'll probably see that level if this level breaks the 106. Okay, so a lot of other currencies are probably doing really badly against the dollar. So we'll see what happens. But the trade moving forward will be when the dollar shows weakness, the trade into euros or other assets which are compared against the dollar. Okay, so I did cover the European markets here. I do want to cover the Chinese market here. Okay, I want to cover this quickly. I just have to find the chart. There you go. We'll cover the Hong Kong market. Okay, because now we're getting earnings coming in from the Chinese market. I traded this move going up here a few months ago now. It's been about a few months, really. Yeah, it has been 2 months since September. I traded this move with Baidu, Li, and so on, and then we had the dip and we sold off. I am now looking around this area of 19,000 to get into Chinese stocks again. And some of those stocks are stocks like Baidu, Li, and so on. So keep an eye out on the Chinese market. I think it will do well. I think if we can get this RSI dipping down a little bit lower, maybe to this 30 area, 40 area, then we could get some real buy-in here around the 19,000 area on the Chinese index or the Hong Kong Hang Seng index. And Chinese stocks will do exceptionally well. So going into other commodities, I'm thinking of covering oil here. Oil, very, very flat. I mentioned yesterday that I'm looking for a breakout here now from this wedge or a dip to 65, ideally 65 and then back higher, but it looks like we're developing a wedge here. So I'm looking for a breakout above the wedge and then to 78 again. Natural gas, we'll cover this quickly. Natural gas dipping here a little bit. probably a good time to sell soon, unless we get some momentum going higher. But yeah, natural gas, not much to see here from what we analyzed yesterday. Gold, I told you guys yesterday, it is a short. However, what might happen, and probably very likely to happen, is a move up higher, a retest of this area around 2,600. So if I go to the gold chart that I use, so what I'm seeing is probably a retest around the 2,700 area, and then we'll see whether it consolidates or it comes down. But most likely it'll probably come down. And ideally, we want the 2,500 area here before we get a buy up and going into gold running all the way up to 3,000, in my opinion, or 2,700, so 2,900 and then higher. Silver, again, I think it's a very similar setup here. Comes back up, retests, and then gets sold off, or retest, consolidates, and then we shoot up higher here to 36.5. The bond market is another one that I wanted to cover here. If we go into the 10-year Treasury, it's seeing some resistance around the key area that I identified, and I do expect this to go down to around 4.18% from 4.39. So we'll see where this goes. This is a key moment here now to decide for the bonds, 10-year bonds, and I did cover Cal for breakout. Yesterday I said we can have a breakout, and since then, so we had a move yesterday, and then I mentioned that now we can get into a breakout. Now that's exactly what's happening here. Today we have a breakout. We are up 4.8%, 5% today alone, and we are now in the green on this breakout. I did not take this trade, but I did give it to you guys for free here because I did see it as an opportunity. Personally, I don't always trade every commodity trade that I see. I focus primarily on stocks and cryptos. But yeah, occasionally I will trade a commodity like natural gas. I have a few times, and this would have been a good trade for that continuation all the way up here for 50%. But let's see, not my type of trade. It's very nice. I like the technicals. I like the multiple tests here at the bottom. I like the consolidation. And then this breakout looks absolutely amazing here. Okay. And then let's go into some industrial metals like nickel, triple, quadruple bottom here. Very, very good. So I traded this original breakout. So I have to just delete these. I've traded those initial breakouts there. And then now we want to be seeing another retest of this zone around 15,500. So multiple retests of this zone, and then a double bottom or a quadruple bottom, and then back up here where I think it can go 1,600. But let's see here. Not really setting up as nicely as I would have liked. And then we have copper. Copper again going up, going lower. I didn't take this trade long because I didn't like the setup. Didn't really develop the way I wanted it. This original trade I did take. That's why I have some notes there. And now what I want to do is show you guys that there was a breakout here, and the next level, in my opinion, is for this double bottom here, and then we'll watch it and see how it moves. But that's it for me for today. I do suggest that you guys go and follow me on Instagram, TikTok for these bite-sized videos that I make on there on the markets and my insights and analysis. And I also suggest highly that you go and join my Telegram group completely for free. I provide analysis and insights. You can talk to me there directly. I'm always there. If anybody has any questions or wants some analysis on any stock or crypto, I'm ready to help you guys out. And I'm always there sharing my ideas as well. So in the next few days, you're going to get some nice ideas. After this dip in the S&P 500, there will be nice ideas that will come along for stocks and cryptos. Okay, so I'm waiting for that dip, and then we're going to get a few more opportunities in the markets. But in the meantime, I am long in plenty of stocks and cryptos, and they're doing exceptionally well. And if you want to see which ones, you can go to my Telegram group. Until tomorrow.